Hello and welcome to a new video on my channel. Today I'm going to share with you a swing trading strategy. This is specifically designed for swing traders who like to hold trades due to their personality, or maybe they just don't have time to monitor the charts for intraday trading. Or perhaps you want to take some swing positions and leave them to play out besides your daily trading. Swing trading is often higher probable than trading on the lower time frames because there isn't much noise up there. Few moving parts you need to analyze, take the trade and forget about it. So if you are interested in that, then this video is for you. And let me remind you that I'm giving up 3 5K challenge accounts for free from crypto fund trader prop firm. 3 5K accounts for 3 lucky winners. All you have to do is first join their Discord server, right? Second, subscribe to my channel. And lastly, go to my previous video where I reviewed crypto fund trader and hit that like button and leave a comment on it. And that's it. You will have the chance to win a free 5K account. You can find all the links in the description or hit on the card that will appear on the upside to access that video. And let's get started. Now, in order to make this model work, this swing trading model work, we need some few basic concepts. So this represents the foundation of this model. And I have talked about all these concepts, 4 or 5 concepts. I have talked about them in my previous videos. You can go check them out or just follow along and you can understand by examples. So first of all, we're going to need the concept of external and internal range liquidity, right? Swing highs and swing lows and fair value gaps. We're going to need this to frame our long or short idea. Next thing, we're going to need order blocks and breakers. So order blocks and breakers, we're going to use this for mostly entries, right? And we're going to need also high and low resistance liquidity. So we want to leave behind us high resistance liquidity and we want to target low resistance liquidity in the terms of failed swings. Next thing, we're going to need time frames alignment, meaning we have 3 or 4 time frames and all of them must point to the same direction. We're going to need the monthly or the weekly to frame our buys. So are we going to take long positions or short positions only? So if the monthly or the weekly is bullish, then we're going to take only long positions. Next thing, we're going to need the daily time frame. The daily time frame is the time frame that will confirm our idea, our buys. So if the monthly is bullish, we're not going to take trades unless the daily confirm that. And lastly, we're going to look for the 4 hour for entries. You can also use the daily for entries, but if you want to hold trades for less time, then you can use the 4 hour time frame. And let's get started. And if you guys are searching for a reliable and trusted funding firm, then look no further than Crypto Fund Trader, a special prop firm with immense potentials. Crypto Fund Trader offers a wide variety of asset classes for trading, including crypto with the tightest spreads in the industry. You can also explore seamless trading options with Forex, stocks, indices, and commodities, all at a competitive spreads. Unlike other firms, Crypto Fund Trader believes in giving traders the freedom to succeed on their own terms. Experience challenges with no time limits, allowing you to focus on reaching your goals stress-free. To get funded, all you have to do is to pass phase 1 by achieving 8% profit and phase 2 with just a 4% profit target. You can choose your preferred platform, either the famous MT5 or their own innovative trading platform. Both options provide cutting-edge tools and a user-friendly experience for seamless execution. What sets Crypto Fund Trader apart is its track record of success. Hundreds of funded traders have not only thrived, but also received their well-deserved payouts. Don't wait for success to find you. Take the leap with Crypto Fund Trader today. Visit their website to begin your trading journey with this promising prop firm. There is no better time to start than now. And let's start with the first example. So we have here the euro against the Canadian dollar. This is the monthly chart. And can you spot anything here? Can you spot any swing trade idea, right? You can see that we have here price took external liquidity, right? Taking external liquidity from the first concept right here. What is your next target? Internal range liquidity. So a fair value gap. Do we have that here? Yes, we have a fair value gap right here on premium. So this is your next target. You can see that also price hit this order block right here. So this is high probability order block, right? We're taking We have taken liquidity from here. So we have two confluences for price to go to the upside. Now, after establishing that we have a monthly bullish bias, now we go to the daily time frames and see if the daily is aligned with this idea, if the daily is confirming our idea or not. If we have no confirmation, then we don't have a trade. So let's go to the daily time frame. So now we have the daily time frames in our hand. What do we see? We have here a consolidation. This is actually called an accumulation, right? We have a manipulation to the downside, and then we have a distribution of longs. So this is classic AMD concept, right? We have accumulation, manipulation, and then expansion to the upside in the form of distributing longs. So is the daily confirming our idea? Yes, we have taken liquidity here, right? We have hitting that order block, and we have a market structure shift right here. So this market structure shift is confirming our idea of going long. So now after we have confirmed that the daily is also bullish, you can either take, like I said before, take the trade on from this fair value gap right here, 50% of this expansion leg, or you can even go to the 4-hour time frames and you look for entries. So let's go to the 4-hour time frames from this and look for entries from discount of this leg right here. So you can see price is retracing to the discount. We have nothing here, and then we have what? A market structure shift to the upside. So now we have used external and internal range liquidity concept. We have used time frames alignment. So the monthly is bullish, right? The daily is also bullish, and the 4-hour is turning bullish here. We have also used order blocks, right? Do we have used high resistance and low resistance liquidity? Yes, we have here. What is this? High resistance liquidity. We have also a high resistance liquidity on the daily. So after taking that equal highs, that equal lows, right? And we have a lower resistance liquidity to the upside. So we hit this field swings right here. This is low resistance liquidity. So we have also this breaker block. So this is a valid breaker block, and we have also an order block right here, and we have a fair value gap right here. So all these confirmations to go to the upside, so you can take your position. So you can take your long position from here, right? When price reaches this breaker block or this order block, your stop loss would be here, and you are targeting this fill swings right here for almost 2 hours. And guys, let me clarify something. When people hear swing trading, they think that they're going to take 10-hour or 12-hour positions, and this is not the case. The RR ratio is going to be the same as the lower time frames, but the thing that is going to change is the percent per trade, how much you are risking per trade. Now, you won't get many trades per month, so you will only get, I don't know, maybe 3 or 4 trades max on swing trading, but they are high probable trades. So if you are risking maybe 2 or 3% per trade, you can lose 2 and win 2, and you are up like 6% per month or something. So you can see we take our long positions from here and exiting here. Now we can clearly see that our higher time frame objective, which is that monthly fair value gap, is not met yet. So you can still take long positions toward it. Now, how can you do that? So after you took a position on the 4-hour time frame from the daily break of structure, next thing you want to go back to the daily time frame, right? We have another break of structure right here. We have a fair value gap here. Price after retracing to this 50%, we didn't have any 4-hour market structure shift, so we didn't have any signal to going long. So there wasn't an opportunity here. Here we have another break of structure, right? And you want to go to the lower time frames of the 4-hour, and you want to look for a 4-hour market structure shift. Let's go and see if we have one. So you can see we have a market structure shift right here. The 4-hour is also indicating that we want to go long. So the monthly, the daily, and the 4-hour are aligned with each other. We have a breaker block right here, these 2 candles, right? And we have this order block. We have high resistance liquidity here, and we have low resistance liquidity here. You can take your position from here. You can take your position from this fair value gap right here, all right? And now you want to target this swing right here, again for 2.5 hour. And you can see that we have multiple opportunities here to maybe pyramid your entries, right? Add more positions to your entries here every single day. And moving on to another example, and this is the US dollar against the Canadian dollar. And we have here external range liquidity has been taken right here and here, also here. And so after we have taken external liquidity, and we can also let we hit fair value gap on the monthly time frames, right? Now we drop to the lower time frames like the daily and see if the daily confirming our idea. So here we can see we have a market structure shift on the daily time frames. You can take your position from this fair value gap. And we have another entry here. We have an order block right here. You can take a position from here. We have another order block and breakout structure. We have a fair value gap right here. So you can see that all the up close candles are supporting price to the downside. You can see that we have multiple short positions you can take here, right? All the way to this fair value gap right here, right? We have this fair value gap right here, and we have this one. So you can see that this is clear low resistance liquidity, right? This represents a swing on the lower time frames. Let's move on to the third example. We are now on the US dollar against the Swiss franc, so USD CHF, and we have this monthly external range liquidity. After hitting external liquidity, we want to look for internal range liquidity right here, and you can see we have all this filled swings right here represent low resistance liquidity. So after we have the idea of going short on the monthly time frame, now we go to the lower time frames like the daily and we look for a confirmation. So price here hit that monthly external liquidity, consolidation a bit, and you can see that we have some kind of a market structure shift. But if you look to the upside, you can see that we have an equal highs above. Now I told you that we want to leave high resistance liquidity behind us, and here we left low resistance liquidity in the form of equal highs. So this is not a valid market structure shift. So you can see price one more time taking this equal highs, and now we have left high resistance liquidity. We have a market structure shift, and now you go to the lower time frames like the 4 hour, or you can take your entry from this order block right here, right? This is high probability order block, or you can go to the lower time frames and look for 4 hour entries. So you can see that now the up close candles are supporting price to the downside. We have this one here returning to it and rejecting. Now we are leaving this up close candles, returning to it and then rejecting. We have this up close candle right here, price return to it and this fair value gap and then reject to the downside, right? So you can see that this model works, and when you have all the time frames aligned with each other, you can take high probable trades and you can get 3 to 4 trades per month. That depends entirely on your watch list. So I believe we have come to the end of this video. If you have any questions, please DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.